Thank you for joining me. My name is Roy Machingura, and welcome to my channel, where I came up with this initiative that, okay, so it's been 3 years now. I'm in my 4th year to trading, right? So one of the things that have been so beneficial to me was actually weekly technical analysis, right? I'm a swing trader. I hold my positions from between a day probably to 2 weeks, 3 weeks, right? So this is my style. So because I also work, I'm not a day trader. So what I've found most important in my journey has been the weekly technical analysis, or the weekly preparation, the work that I put over the weekend preparing myself for the next week. So I just thought to myself, okay, since this has been of value to me, why don't I share with others, with the trading community, what has been helping me? So I also have another thing that helps me a lot, that has been a game changer in my trading, and that's my video sessions, my video review sessions, because I record each and every trade that I take. So in due course, I'll also be sharing those with you, right, so that you can add them to your trading methodology. So without wasting much of your time, I think I've introduced my name, Roy Machingura. I hope we have a very good journey together, right? So without wasting much of your time, so the purpose of this, will be doing the top-down analysis weekly. So weekly we'll look at our monthly, weekly, day and daily charts of the Euro USD and the USD Usdzar pair. So the reason why I've picked those is Euro USD. It's amongst the most popular. Then USD Usdzar is the one that I mostly use, that mostly applies to me. So it's also another way of reaching out to the non-trading community, those who just want to know where the rates will be, or the general direction of the exchange rate will be, right? So without wasting much of your time, let's get into it. So we're going to start with the USD GBP, USD, Euro USD, right? So we'll start with the monthly, right? So as we can see on the monthly chart, there's been an upward movement in the past months, right? But then they have reached this 1.18350 resistance zone, 1.1835530 to 1.19291 area, right? And in this area, they formed this bearish engulf, and as we know that a bearish engulf is one of the most probable or the most powerful reversal patterns, right? Reversal candlestick patterns. So, and also a combination of that with the resistance structure is very has a better probability. So given this, we are expecting that the price is going to continue with the downward movements up to this 1.4470 support zone, right? So as you can see, the price broke the support zone, so it's supposed to retest this zone, and if it holds, it's going to continue to the upside, and if it doesn't hold, it's going to continue to the downside, right? Then we go to our weekly, and again at our weekly we can see also there is a near bearish engulf. So I like to call this bearish piercing, right? Because they did not completely engulf, the bullish candle, right? But of particular interest is the fact that, one, we have this resistance zone, and number two, there is a double top, right? And after the double top, we can see that the price formed a lower high. As we can see, this shaded area, it's representing a low, right? It's representing a high, and also this other shaded area is also representing a high. And as we can see, this high is higher than this low, so the price formed a lower low. And once we see a double top with a lower low, it means the probability is very high of the price continuing the downward movement. So As with the higher time frame, which is the monthly, we're expecting that the price will continue the downside to the downside and test this 1.15100, so on. If it holds, it will then return back and come again to this zone. But if this doesn't hold as a support level, the downside is going to continue. Right. So according to our weekly, daily, according to our monthly and weekly, there is great support for the bearish pressure. Then we go to the downward, to the daily. Yeah. So as we can see also, I prefer analyzing maybe the last 3 or 4 candles, right? So as we can see, there was an evening star that happened here, right where I'm circling. Apologies, because let me use this. Right, so you can see that there is this morning star that was formed, right? And after this morning star was formed, we can see that there is another morning star that got formed here, and it formed a lower high and a lower low. And within this first morning star that we pointed out, we can see that the price came from a higher high, made a higher low, and then made a higher high, and then made a lower low, right? But I usually don't want to regard this as a lower high, because at times a doji is a sign of an indecision, right? So now within this pair and in this particular context, what we are thinking, or what the price may do, or what our if that statements are going to say is, so because we didn't have the bullish support in the weekly, we had no bullish support also in the monthly, we are not going to partake in a bullish position. I am not going to partake in any bullish, because I don't like the probability of the bullish positions, right, according to my style. So now I'm going to create the if then statement for my bearish positions, right? So number 1, so if the price closes below this price, 1.17446, right, this is 1.17446, or it closes below 1.8243, right? So this is what I've written, because I had already written this, right? Or if it closes 1.82433, right, it means the price would have formed a lower high, right? And a lower high, that's the perfect pullback where we want to take our bearish positions, because a lower high signifies that that's the position where we sell high and then we'll buy lower later to close out our position, right? So you can see that the basis with which we are saying that the bearish patterns will have a higher probability is because we have a supporting weekly and a supporting monthly patterns. So now we'll move on to the USD Usdzar, right? So again, we'll start with the monthly. As you can see, with the monthly, we have 2 dojis, right? We have this doji, right? It might not be visible because of the patterns that I put, right? But you can see that this is a doji followed by another doji, right? Or this spinning top, right, forming an evening star. And usually an evening star is a pointer that, or is a pattern that signifies that, or that supports bearish movement If it's in morning star, it will be supporting the bullish movements, right? So according to the monthly, we can say that the bearish positions are more likely to have a higher probability, right? And also we can see that we haven't yet the price hasn't yet made a higher low to support bullish movements. Then we move on to the weekly charts. Now the weekly, it's a different ball game now, because the price formed a higher low, right? As you can see, this low is lower than this low, so this new low is a higher low, which signifies that this is a pullback, right? And we want to buy in pullbacks, right? So which means that if we buy from here, what we are doing is we are buying low in order to sell high later on. So this is the basis. This is the basis with which we are saying, according to this time frame, bullish in Gauss, bullish patterns will have a higher probability. But there's also support for bearish moves. Why? Because there are these tails, these two tails, and also we can see that if you look closely, there is a pink shade inside. It's signifying a head and shoulder pattern. So you can see that there's a head and shoulder pattern that's supporting bearish moves, right? So my anticipation is that the price may either, since it made a higher high there, it may either move to the upside and test this zone. If it breaks this zone to form a higher high, then we'll be expecting an upside move, right? But if it fails, if it closes below this low, this high, then we'll be expecting that if the price then comes down and close below this position, let's say 16.35860, and then forms a lower high, then we'll be expecting a downward movement, and that downward movement will be approximately equal to this distance from here to here. So our downward movement will be approximately up to 15.3059. So this is what we are expecting, right, in the coming weeks. So in the coming weeks, we are either going to see a continued upward movement if it breaks this, right, and forms a higher high, and then it goes up, or if it forms a lower high, right, and continue and breaks this resistance zone, then it will go out. So according to our weekly, it's more probable that there will be bullish positions. Then we'll go to the daily. So as we can see also, right, on this daily, there's also formation of a double bottom, right? This first bottom and this second bottom. But however, unlike that other double top that we saw, right, at this time, what's happening is that this low is higher than this low. So there is a probability or a support for a bearish move, right? But however, looking beyond this now, looking beyond this low, what we can see is that this low, this high, right, the price came and made this high, right, and made a low, and we can see that this low is lower than this low. So the price also made another double top, another double bottom, right, and this time making a higher high from this. So this is higher. We can see that this is higher, right? We see the low is higher, right? So what we are expecting now is, since the price coming from this low, it made a higher high, because this high is higher than this high, we're expecting now bullish movements, but only if the price comes and forms a higher low. So if this bullish candle, if there is a next bullish candle, we expect that this bullish candle, if there is a reversal and it makes a higher high that's when we'll be expecting an upward move. But if this bearish moves continues and then breaks this zone, right, shown by the dotted blue line, we would expect that after breaking this, the price will go and test again, and if it closes below this high now, if the price closes below 16.62315 and forms a lower high, it means that we would expect the price, the bullish pressure to overpower the bearish pressure to overpower the bullish pressure. And remember what I have told you about, that approximately we'll be looking, the downward movement will be approximately equal, or will be approximately the same as the height of the head and shoulder pattern. So we'd expect it to be about 1, 2, 3, 4, 5, right? Then 1, 2, 3, 4, 5. So we'd expect the bearish movement to take place from here up to this point to 15.35097. So to back our thesis, right, firstly, our bearish movement is backed by structure, and our monthly time frame. And then our bearish bullish movement is based on the weekly structure, because it forms a higher high, and also on the formation of a higher high that has happened with the double top bottom on the daily time frame. So this is why we are preparing for movement either side on this pair, unlike on the other pair. On the other pair, we only had one movement that we had prepared for. So thank you very much, guys, for joining me and sticking with me to the end. Obviously, there are a lot of things that you can add. As you can see, this is my first time doing it, and I believe that there are areas where I could work on, and also there are areas where I could be more clear. So the only way that I can know of them, right, is for you to comment below, right, and then give me your suggestions, and then I'll implement them in the next video. Otherwise, thank you very much. I hope you're going to have a blessed week. So grind the markets with grit. Roy Machingura out.